Let's analyze the stock market trading session for today, Wednesday, March 30, 2022. Let's get started with the S&P 500. This is a daily chart, and today finally decided to take a break after 4 up days. For the record, I liquidated my position today, so I no longer own the S&P 500. Let me go to the 5-minute chart. This is a 5-minute chart, and this is where I sold 1/3 of my original position, where the arrow is when it dipped below the day's low, when it made a new low for the day. And then down here I could have just actually liquidated my position when it dipped below 4,600, but I really wanted to give it more room. It was a big drop of 20 points on the bounce. I decided to just liquidate my position as I anticipated a very weak close, but last 5 minutes got a nice bounce. Coming back to the daily chart, I think today's price action was neutral. It was not a reversal, not bearish. What was resistance? Yes, resistance before it acted as support for the second day in a row. It closed above that pivot point, 4,600. So I see no reason to be bearish or to go short. Going short, I think it can be very choppy as the path of least resistance is still north. It could be very choppy on the way down because you have major support levels. You got the 5-day moving average here, then you got the 100-day moving average and these pivot points. And today's price action, it just didn't feel like it was low momentum. It was very low momentum. So until high momentum shifts to the downside, I would not consider shorting. For instance, if today would have closed below, let me clear this way. For instance, if today's candle was a big magnitude, let's say it was red, and it closed down here below the 5-day moving average, then this chart would have looked a lot different and it would have been a very bearish price action, a reversal candle, and that in that case it would have made sense to consider shorting. But for now, I think it was consolidation day and no reason to short. We could probably end up with, what if we end up with something like this, going sideways and then north again versus going south. Like I said, south, lots of support levels, and it can be very choppy. So I don't really see much potential to the downside yet. I was a bull. I'm not a bear. I'm just a spectator for now. And for the Nasdaq 100 now, seems like this area has been acting as very strong resistance. Now you can argue that this candle looks very bearish. It is now below the 100-day moving average and below the 200-day moving average, but the magnitude of this candle is now big. Doesn't look bearish to me. It didn't close near the lows of the day. It is still above the rising 5-day moving average. It can quickly tomorrow gap. It doesn't even have to gap up that much. Gap up and then just push higher. So being short could be very risky. For now, I'm doing nothing, really nothing to do. I'm just going to wait for a setup with good risk to reward ratio and with a highly predictable outcome. And I just don't see it now. Now for the Dow Jones Industrial Average, nothing bearish about this one. Found support of the 100-day moving average. This was resistance. Now it's acting as support. It is inside yesterday's trading range, or it's called an inside day. So there's really nothing bearish about this one here. A dip below this level could be a short if it can stay between this level and this level for a session or two and then push above this level could be a good long again. Yes, again. I will be watching these two levels very closely for the next couple of sessions. Now for the semiconductor index, this one took a big hit today, big sell-off. For the record, I liquidated my position, so I'm no longer long the semiconductor index. Let's take a look at the 5-minute chart. So today it opened lower, kept going down, quick bounce, made a new intraday low, and that's when I decided to sell where that arrow, what the arrow's pointing to. Made a new intraday low. That's where I liquidated 1/4 of my original position. And then here also made a new intraday low. And then that's where I liquidated the rest of my position. Coming back to the daily chart, it just couldn't yesterday. It found resistance at the 100-day moving average, and it proved to be very strong resistance. Now it is trading between the 200-day moving average or this area here, this trading range, which have been here. It was resistance, and then it became support, and now we'll see how it behaves around this area, which coincides with the 10-day moving average and the 200-day moving average. So maybe this could be a good range, a good trading range for now, between the 200-day moving average and the 100-day moving average. For now, I'm just going to be watching these levels, nothing in between. Pushes back above this level would be a good long again. This below 34.50, and it could even be a short. Now for the Russell 2000, this one big sell off after testing the 100-day moving average. That was yesterday and then today, and now it is down below this trading range, which has been a good trading range for the last year or so, multiple times, and it just couldn't stay above it. Hard to be bearish though. It is still above the 5-day and the 10-day moving average. So the 5-day moving average and the 10-day moving average could act as very strong support. If tomorrow we dip below that, then it'll be a different story. You're still gonna have some support down here. This pivot point. You got the 50-day and the 20-day moving average. But this one between, if it dips below this level tomorrow, I think it would be very choppy. I don't think it will be a good setup to go short. We'll see what happens tomorrow. For me, if there's no setup, there's no trade. Thanks for stopping by and good luck trading tomorrow.